All right. So today we're going to be talking about the topics we see here. So that's a break of market structure, major liquidity, internal and external liquidity. So I'm going to go ahead and jump right into it. Okay. So now we'll go to a new doc. Okay. So what is a BAMS or a break of market structure? A break of market structure is basically when the market either shows sign or when the market takes out a key level of liquidity. Okay, so when it takes out a key level of liquidity, it is either showing signs that it is turning around, so that is a reversal, or it is showing sign of the progression in the current trend. Okay, so um, this is when this is when price uh makes a major shift, either to continue a trend or change the trend direction. So that is basically what we mean in simple terms by a break in market structure. Alright, so um how do we identify a break in market structure? So um it can be identified can be identified by let me see, either when the price takes out major liquidity liquidity a swing low, let's say swing low, a swing low or high, or an intermediate low or high. Alright, so basically when we talk about a BMS, what we mean is when price tends to either break, change the trend or continue the trend. So if you have this downtrend right here, have this downtrend, the BMS happens when the trend continues because the trend is a progressive downtrend. So um, we say here we have a BMS. All right, so this BMS shows a change in trend. So this was going up and then started turning downward. All right, so this BMS continues the downtrend. This BMS continues the downtrend, that one continues the downtrend, and then this BMS here continues the downtrend as well. Okay, so these are three instances of a BMS on this chart. Okay, so now what do we mean by a swing? low or high. So we've discussed this before. So a swing low or high is when we have a um 3 point formation like this. Alright, so this high right here, I would call it a swing high or a swing low. So it has one high by the left and one high by the right. Alright, so that is a swing high for the context of this teaching. Alright, so that's a swing high for the context of this teaching. While a swing low will be one that has um two other lows by its side. Alright, so we have in the swing high, we have one high with another high by the left and another high by the right. While in the swing low, we have one low by the left, one low by the right. So, um, anytime this, so if we have something like this and like this, we see this guy as quite a strong point in price. All right, we see it as a strong point in price. All right, because he took out liquidity first and then change the trend. All right, so if price should ever come and take out this guy, that shows that the trend is bullish. All right, that is a break of market structure that shows bullishness. All right, so we also see this guy as a strong point in price. So if price should ever turn around and break out below or beneath this point here, we'll say that is a strong bearish point because it's first of all took out liquidity, then started a nice strong trend which started continuing to the upside. So if price will ever come and take that out, then that will be uh, a break in market structure, right? So that is how you identify a break in market structure. So that's one of the ways. And then the second way is if we have um, an intermediate high or an intermediate low. How do we identify that? An intermediate high or low is one the high or low that fills in an imbalance. All right, it fills in an imbalance. It fills in an imbalance. Mm, Put this out. So fills in an imbalance right there. So when we now have an intermediate high or low, right? Um, we have we have a trend now. We have a trend, and it creates an imbalance, and later comes down to closing that imbalance, right? So um, this this low right here that closes the imbalance um is seen as a swing an intermediate low. Alright, so why it's seen as a key point in price is because it comes and mitigates a strong area, right? So any place that has a strong price movement, all right, a strong price movement that shows manipulation, that shows strength, all right. So when we have a strong price movement like this and price comes down to mitigate it to continue the trend, that is showing that this place is strong as well. If you remember when we spoke about our sponsor candles, if you think back to when we spoke about sponsor candles, we said a sponsor candle has strong price movement from it after taking out liquidity. All right, so this place is likely mitigating something like a sponsor candle right there. So that makes it a place that also has another sponsored candle. So this place is another sponsored area because it comes down to close an imbalance. All right, so it comes down to close an imbalance. I'll just mark this place here. I'll just mark this place as um, imbalance. imbalance right there. Okay, so this place will be our intermediate low. All right, so if price should ever come and take that out, that is a break of market structure to the downside. Okay, that is a break of market structure to the downside. So if we should go like this, okay, this place represents a strong low. So if price should ever go down to take it, it is a break of market structure, right? So for a downtrend, something like this will be, of course, the opposite way. All right. So if we have a nice trend in market and price should create an imbalance here, any high that goes and fills up that imbalance, it is regarded as an intermediate high. All right. So that high is viewed as a strong high, and if price should ever go above that high, that is a break of market structure. Okay. So that high is seen as a strong high. So anytime price goes above here, that will be a BMS. That will be a BMS. That will be a BMS. So let me just put the same annotation as well. So going back to it, we have a swing high to be a situation. Um, to be swing high. So have a swing high to be a situation where first of all price takes out a previous high, then makes another high, all right, and then price goes ahead to trade lower, right, after forming another high like this. So that is a swing high, all right. That's a swing high, and every time a swing high is taken, it is seen as a break of market structure, and the opposite is said to be a swing low. Or you have a low, okay, you have a lower low, comes a lower high, and then continues higher, right? This is seen as a swing low. This is seen as a swing low. So anytime time price should come below it, that is a break of market structure in that trend, right? So if this low should form in an uptrend, if this low should form in an uptrend, we will not expect this low to be taken out. Anytime this low is taken out, we believe that either that uptrend is having a very major correction, or it has changed trend entirely. So either the trend has had a major correction or it has changed trend entirely. Okay, but we see this swing low in a downtrend. All right, we see this swing low in a downtrend. Whenever price goes below it, we will see it as a continuation of the downtrend. We see it as a continuation of the downtrend. So a break of market structure is basically when price makes a major shift either to continue the trend or change the trend direction. So most times when we are trading, we usually wait for a BMS, okay, to validate our trade idea. Right. So it might be that you're waiting for the BMS for a confirmation, or you're just waiting for the BMS to form a trade idea around whatever you're looking at. Okay, so before we move to the next thing about identifying liquidity, we'll just check the chart if you can find examples of what I'm talking about here. Okay, so um, Yeah, we have a downtrend. We have a downtrend over here, right? We have a downtrend over here. So I want to point our eyes to this imbalance first of all. Okay, so this imbalance here, it gets it gets closed off by this low. All right, so that low closes the imbalance, and when price tries to continue higher, but it doesn't have much strength at all to it. It doesn't have much strength, and price breaks down. All right, so price breaks down. So that is a key sign that this downtrend has continued. Right. So once this point gets broken down, that will be a sign for you to probably join the sell because this downtrend is continuing. Right. That will be a sign for you to start selling this pair. All right. That will be a sign to start selling the pair. Also, we have another imbalance in here. This guy fills up the imbalance. All right. Tries to go down. Right. Tries to go down. Receives no much strength, and then price goes above that intermediate high. All right, so once price goes above this intermediate high, that is a sign. If you are selling, you know that this is a sign that we're having a major correction of this entire thing that happened down here. Either we're having a major correction or the uptrend, the previous uptrend is continuing. Okay, but in this case it doesn't continue uptrend by making a higher high. It just stops somewhere around here and reverses. All right. um can you guys hear me clear, or this noise is over my voice? Can you guys hear me clear? Okay, okay. All right. So once that high gets taken out, that is a sign that we have a break of market structure to the upside. So um, if you are selling here, because basically your cup of tea in this situation or in this scenario is to sell. All right. So probably you'll be selling in this scenario. All right. So if you are selling, that is your sign that this trend has changed to the upside for the moment. All right. So let's keep looking. Um, let's keep looking at the chart. Let's keep looking at the chart. So we have this swing low, this swing low. We have this swing low right here. All right. So why do we see it as a swing low? It's a swing low because it has low a low to the left of it, and it has another low to the right of it. All right, so this is a swing low. So once the swing low gets taken out, that is a sign of continuation of the downtrend. That's a sign of continuation of the downtrend. That's a sign of continuation of the downtrend. So this is a break of market structure to the downside. So once we have this swing low taken out, we can see that we have formed another new range right here. This is a new range right here. Okay, so this is the first range. This is first range, and then this is the second range that is forming right here. Okay, so um the break of this low right here, this swing low, that's a sign of continuation of the downtrend. Right, so whatever happened here is over. Okay, whatever happened here is over. Right, so it won't continue. In case if you were thinking that, oh my god, this is so strong, this is so strong right here, the price may just be retracing to continue the trend. Once this low gets taken out, you know that that is never going to happen again. You just know that, okay, this high, this is never going to become that higher high anytime soon. So best to join the downtrend. All right, so we keep looking at the chart. All right, so this is another imbalance right here. Okay, this is under liquidity void. All right, so this liquidity void came to closing an imbalance. Okay, came to closing an imbalance. All right, so whichever leg closes that imbalance, we'll see it as a intermediate low. All right, so whenever the intermediate low gets taken out, that is a sign of break of market structure. All right, so in this case, we are in an uptrend. All right, and we have an intermediate low in an uptrend. Okay, in fact, this intermediate low is also a swing low because it has low to the left, lows to the right as well. All right, so this low right here, we see that if price should go below it, then that is a change of trend. Okay, that is a downtrend. All right, that is a sign that downtrend has surely continued, because this is a major downtrend if you actually look at it. All right, it's a major downtrend in the big picture. Okay, but we see that, okay, this low is a strong low. All right, intermediate low, we call it an intermediate low in this case. So once price goes below it like that, that is seen as a break of market structure. Okay, that is to show us that the trend is no longer bullish, but now it is bearish. Okay, and you can see what happened after that. You can see what happened after that. Okay, so after this low was taken, this was the first major sign that this price would break down like this. Because first of all, we have a downward move like this. All right, so once price took out this guy, once price took out this guy, once price took out this guy, that is a sign that the price is correcting. All right. So since it's a strong downtrend, we only believe that it's a correction. We don't believe that is a change of trend. All right. So we now look at, okay, where is it correcting to? To correct to somewhere at the beginning. All right, somewhere up here. To correct to this area. Okay. So it started correcting, and we are going to watch the corrective move. We're going to watch the corrective trend. So you can notice that in this corrective trend right now, the price never goes below any of the major swing lows, all right, or intermediate lows, because once it does that, that is your sign to get out of this uptrend. All right, so let's go right in and evaluate. Let's evaluate this move. Okay, so here we have an imbalance. We also have an imbalance here. All right, so the price doesn't respect this imbalance at all. It comes right down here to respect something. I think there will be like a sponsor candle down here, so we respect it. Okay, so we'll now view this place as an intermediate low. So price must not come below here, or the uptrend has ended. Okay, so price keeps going, respects the intermediate low, keeps on going. All right, respect the intermediate low, keeps on going. All right, so we have imbalance here, imbalance here. Price comes down here to fill up this imbalance. All right, so sponsor candle is right here. All right, sponsor candle is right down here. Okay, so the price keeps on pushing higher. All right, forms another imbalance, closes it partway, closes it partly, doesn't close it totally. Okay, so it doesn't even touch any of these highs. So you can't really say that's a reclaim block or anything. So this high is, or this low is a weak low. It's kind of a weak low. Okay, so once price comes down to closing that imbalance, this guy is under strong low. So it keeps on pushing higher. All right. So once this guy that mitigates this imbalance, or should I say mitigate, that covers up this previous imbalance, which is an intermediate low, once it's taken out, we see that as a break of market structure. That is a BMS. That is a BMS. That's a BMS. All right. So once the BMS happen, that is our cue to start selling. Okay. So what I did here is that I sold probably around here. Okay. I sold around here. Okay. So profit is on time. I expected it to go below this. So this was my target down here. But then we have this explosion that up here. I spoke about this thing, confused him. I think this was CPI. I think it was CPI news. Just went up, made a sharp correction to the upside. Made a sharp correction to the upside. And then we now later continued the bearish move. Right? And now this is down where we are right now. So that is basically how you identify a point that is strong in price, a point that is strong in price. All right. So looking back in here, where the uptrend started, okay, can see that this high has another high to the right side and another high to the left side down here. We have this other high to the left side. So it is a swing high. Took out liquidity, then took out liquidity again to the downside. So strong high right there. Once it gets taken out, that is a sign that a correction has started. Correction has started. So um break of market structure is the first sign, or is the sign that will let you know if the trend you are trading in has changed, or if the trend you are trading in is continuing. So you just have to look out for these signs. If you are trading an uptrend, okay, you anytime you see that an intermediate low has been taken, right, a major intermediate low has been taken, or a swing low has been taken, you know that we are having a downtrend for a good period of time. But if you are in a downtrend and then you have an intermediate high taken out or a swing high taken out, then you know that we are now in an uptrend for a good amount of time, either just to correct the downtrend or to change the downtrend direction entirely, depending on what the big picture is telling you. So let me say it's a 1 hour uptrend. You are going to look at the daily chart to know whether it's also an uptrend on the daily chart. So let me say now you have a break of market structure to the downside during an uptrend. If the daily chart is telling you that is a bearish move, you know that that bearish move may totally change the direction of the uptrend. Okay, so I'm going to learn more about this when we go into analysis later tonight. But I'll pause here and see if you guys have any questions. Any questions so far? Good evening. From here, okay, what we have here is that it is a downtrend. Okay, so looking at downtrend now. First of all, this high right here, it's closing an imbalance somewhere here. There's something that happened here, sha. So it closed in that imbalance. So it came right up to this area. If we look inside that place, it might be a mitigation block or a breaker block or something like that. Okay, so it closed in this imbalance here and touched whatever is inside this box. Okay, after touching it, it broke down to the downside. So since we have a progressive downtrend that's been going down for a long time, I will just be looking to sell from here. Okay, so I would look for something within this area, from the top of this down move to the bottom. All right, so I may now check equilibrium discount premium. Okay, so if we go into premium area, I'll look for something there to sell to. Okay, so basically once price goes above this high, I know that this wave now has started correcting. So I'll expect a correction to the maybe the top of this area, or at least to this low here. This is the previous low. So it might use here as a reclaim block. Either it will use here as a reclaim block, or it will come up here to whatever started the trend. So either of those two. But since we have not taken out that intermediate high over here, we are still going to be selling. So I'll probably look at this place is a breaker block. If you remember our last class, you agree with me that this is a breaker block. So I might sell at that breaker block, or it might not get to that breaker block since it's already down here. It might look at this place. This place may constitute a reclaim block as well. Okay, so this area might constitute something like that. So I will look inside there. This is an imbalance that just got closed in. So basically, what I'm looking for in this place, I'll just look for a sell either here or somewhere around here. I would favor this area because this place is a premium price and this place is still like a discount. Okay, so if I can't get a sell here, once the price keeps breaking down, I'll look for sells in other new ranges. But that's basically the breakdown. Looking at this chart now, this is a long-term downtrend. So as long as we don't go below this high, I'm continuously selling it, or we are continuously selling it. That's just basically the idea from where it currently is. Get? Yeah. Okay, so basically, the next thing we're going to talk about is uh types of liquidity. Okay, types of liquidity. We have major liquidity, internal liquidity, and external liquidity. So let's start with major liquidity. Major liquidity. Okay, so this is um a form of liquidity that is um representing a strong point in a particular trend. If this liquidity is taken out, the trend has changed. Okay, so the trend has changed. Okay, so now let's uh let's look at what a major liquidity looks like. So if you have an uptrend, okay, if you have an uptrend, if you have an uptrend like this, all right, you have an uptrend like this. So your major liquidity are basically those areas that you don't expect price to go back to. So which means that our lower highs are sorry, our lower lows, their higher lows, pardon me. Our higher lows, these are the major liquidity. So all these are major liquidity. And if any of this major liquidity gets taken out, if any of this major liquidity gets taken out, that is our cue, our sign that this downtrend is no longer effective. All right, so this downtrend is no longer effective. All right, so our major liquidity will not be all those things that we spoke about in the previous one. Okay, so uh the swing lows, okay, and the intermediate lows. So anytime we find them during the trend, those are our major liquidity. All right, so most times major liquidity take out liquidity, they take out some form of liquidity, then keep going higher. So most times they are inducements. So let's look at what it might look like, the four or three ways it might look like in a trend. So the major liquidity in an uptrend, right? It might look like this. So we have a low like this, right? And it takes it out, forms a higher high. This is an inducement here. Okay, so this is an inducement, and we can refer to this point as major liquidity. Major liquidity. Okay, so major liquidity right there. Okay, so it can look like this, or it can look like this. So it induced all these lows. All right, induced all these lows, but didn't take out this major low down here. So this low is also a major liquidity. Once this major liquidity is taken out, this one might go as well. So this one as well. Okay, so this major liquidity here is so crucial. Once the major liquidity is attacked, just know that the trend has changed. Just know that the trend has changed for the meantime. Okay, so it might just totally reverse and become a downtrend, or it might correct to to the beginning of this upward move. Wherever the beginning is, it might be down here. All right, so major liquidity are the strong points in price action. All right, so this guy right here will also be a major liquidity. This guy also be regarded as major liquidity. All right, major liquidity down there as well. Okay, so it can also form like this. Can have price moving like this as well. Then it comes up here to form some kind of structure. All right, and then somebody could just come and take out all of them and continue. Right, so this guy can also be how major liquidity forms. All right, so forms outside of this previous range on top of the high. So it formed all this range structure. We call this range structure. Okay, don't want to treat range structure is not anything special. It's just some formation that happens after a BMS. Okay, so this right here was a BMS to the upside. Okay, so this BMS shows that the trend is still strong, is still continuing. All right, so after this BMS, the range structure happens, and then come into it, take out all the liquidity there, take out all this liquidity here, and still continued higher. All right, so this is major liquidity right here. Okay, so the major liquidity are basically your swing highs and your swing lows that are on the direction of the trend, and they are major points. So that means they mitigate all the previous points. What do I mean by that now? Let me say in this uptrend right now. Okay, so in this uptrend right now, we have this point to be a major point in price. Okay, then we formed a high here, and then this low right here came to mitigate or close in this imbalance that was right here and mitigate a sponsor count that was inside here. Okay, and it continued. Then this came down to mitigate something in here, rejection block. You can call it a rejection block. Okay, and then it formed under fast move here. Okay, imbalance. This guy came in to induce these lows and still continue higher. So it induced these lows and mitigated whatever started this imbalance, this speedy movement here. So it mitigates whatever started it, which is obviously going to be a sponsor candle as well. Right, so mitigated it and continue higher. So all these moves somehow they find a way to mitigate each other. All right, they find a way to mitigate each other. This guy that did not mitigate this guy here, okay, did not mitigate this whatever started this upward move. He did not mitigate it. All right, so this low here didn't mitigate it, even though it took out liquidity right here, right, and it formed a higher high. But I would not count it as major liquidity because it didn't mitigate whatever was the previous major point in structure. So whoever now comes down to mitigate it, that is now who will now be my major liquidity. So as you can see that once this last major liquidity was taken out, this is the last major liquidity and the first one to fail. So once it failed, that trend pretty much changed. Right, this uptrend pretty much died. All right, pretty much died at that point, and now the downtrend properly resumed. So the major liquidity is what to tell you if the trend is still intact. Once the major liquidity is attacked, that trend is over for for the meantime. So this could easily have come down here, come somewhere down here, and then continue the uptrend. But then it's made a move for the downside because this is a progressive downtrend that is very, very, very strong. Very, very, very strong. Okay, so um if this price action now should ever come up to this place and take out this high, okay, so this high is a major liquidity on this entire downtrend. Once this high gets taken out, I will be buying it for a very long time because we are probably going to retrace all the way up. All right, all the way up to something significant. Okay, so this high is a major liquidity. It might be this guy as well, but you have to go down and analyze it a little better. But just purely looking at the chart, I would say it is this guy. All right. So basically, major liquidity is basically the liquidity that must stay intact for your trend to still be valid. Once it gets taken out, that is the end of your trend for the meantime. Okay, so internal liquidity. Uh, this is liquidity that is inside a range. All right, so this is liquidity that is inside a range that can be induced, okay, before the trend continues. Continues. Okay, so that's internal liquidity. So internal liquidity might look like this. Might basically look like this. We have an uptrend. Okay, so all those little guys inside it, all those little guys, all those little guys before the thing retraces. All these guys, one, two, three, four, they are internal liquidity because they are still inside this main range, all right? And price can take them out without necessarily affecting the direction of the trend. Okay, so price can come down here, induce all of them, and still continue going. Right, so these guys, this low, this low, this low, this low, they are internal liquidity. I won't see price going below below one of these lows and be like, oh my god, it's not a downtrend. That's a break of market structure. No, that is not a break of market structure. That's just a retracement. Okay, to induce all these guys and continue the trend. Okay, so once all these guys are induced, some people may have their stop loss below there, so they are taken out of the trade. Okay, so these lows are induced and price continues pushing higher. Okay, so these these guys are internal liquidity. So liquidity can be engineered in this way as well. So maybe there could be a sponsor candle and maybe a tiny imbalance around here that price goes and closing before continuing the trend. Can be a very small one down there. As long as price has not mitigated it, it could be a point where price might later retrace to before continuing the trend. So all this internal liquidity, I don't see them as anything serious. I don't see them as anything serious. Price can take out internal liquidity and still continue the trend. I won't change um, my bias. Okay, my bias is basically which side I think the market is going on a long term basis. So I won't change my bias because I see internal liquidity being taken out. So basically, this is how internal liquidity looks like. All right, so the liquidity that's inside the range can be taken out, and price will still continue the trend. I'm taken out, and that doesn't show any sign of a change in trend. That is an internal liquidity. All right, so you can see that all these guys were used as internal liquidity when this move up happened. All right, so for this case now, you can see that our major liquidity was up here. Right, so if that major liquidity was taken, you see that okay, this is not this downtrend that was happening here is over. All right, so we've now continued another uptrend, right? But that didn't happen. We just use this internal liquidity to get some uh, selling position. So these sellers give up their position, and then we bought up those positions and then sold in place of them. All right. So that is basically what the banks did in this case. Push it up fast, scare everybody out, and then take their positions instead. All right. So that's internal liquidity. That's internal liquidity for you. So it happens everywhere. This guy here was internal liquidity, was induced, and the price continues. So all your weak lows and weak highs, they are internal liquidity. Internal liquidity. So internal liquidity can be taken out, and the price will still continue in the desired direction. You can see all these guys, they are internal liquidity for this big range. So this is one big range, and all this liquidity got induced before price went lower. Alright, so that's internal liquidity. And the last one I was supposed to speak about is um external external liquidity. Okay, so this is liquidity liquidity that we expect price to take out to show um, signs of trend continuation. They are basically targets. Alright, so they're basically targets. Alright, they're basically targets for us. Targets. So looking at this now, external liquidity are just basically where I set price to take out. So if you are having a downtrend, the downtrend forms lower lows, lower highs, lower lows, lower highs. So all those lower lows are our external liquidity. Once we form a new lower low, if price retraces, we are using that lower low as our next target. So it's external liquidity. So we have, let's say we're on an uptrend, we have a range like this. Okay. So our external liquidity is this guy. So we expect this guy to be taken out next. So his external is outside the range. So once we hit this area, we are now outside that range and have formed a new range. So boom, external liquidity is taken out. So we could now take out what there might be small liquidity inside this leg. Okay, so we could take out all those internal liquidity, but we don't take out our major liquidity. So we might buy here or somewhere along the way. Right? We might buy somewhere along the way, might buy here, and we're expecting our external liquidity to be taken out. Okay, and then price comes back again, just like that. So all these areas are external liquidity. All these areas are external liquidity. So they are basically our target when we are joining the trend. Right? When we are joining the trend, they are basically our target. If let me say if we have these smaller guys in here, I am not sure that this trend is still continuing. You can wait for the external liquidity to be taken out. Once the external liquidity gets taken out, I say, okay, this option is still valid. So I can continue my buying business here. Right. So in the downtrend as well, the same energy. Okay, same thing we are doing. Okay, external liquidity is our target. So All these lows are external liquidity. All these lows are external liquidity. All the lows are our external liquidity. So that's basically external liquidity, major liquidity, and internal liquidity. Let's go over them again. All right. So our major liquidity are the liquidity that we expect price not to take, and if price ever takes it, that is a change of trend. One, our internal liquidity are places in price that we expect price to take, but not necessarily change the trend. So they are basically places that are weak and they can be induced at any time without actually being a sign that the trend has changed. So those are internal liquidity. Internal liquidity are the weak places that might be taken out, but we will still expect price to continue the trend. All right. So internal liquidity are just basically places that do not properly mitigate the major liquidity. Okay, so that is internal liquidity. While our external liquidity is our target. These are places outside the range that we use as our target when we are joining the trend. Okay, so external liquidity are places we expect price to take out to be our targets. All right, so they are going to be our target in price. So that's basically the difference between all those three. So in when you're trading, you're expecting to buy when price takes out some internal liquidity or fills in an imbalance, for example. So when price takes out internal liquidity, you buy there. Okay, you might put your stop loss at the major liquidity. So let me say you buy when price, maybe you use this place now as inducement. So you might buy when price takes out this internal liquidity, fix your SL at the your major liquidity, pardon me, fix your SL at your major liquidity and have your external liquidity as your final target. So you might take profits on the way, but this will be your final target. So that's just how easy three and how the market or how you should trade when you are looking at the chart. So you're looking at where is my major liquidity, where is my internal liquidity, where can I sell at, and where will be my final target. So that's just the difference between all three. Okay, so basically at this point now I've gotten to the point that you guys can actually trade or understand everything in trading. Right, understand everything. You basically understood all the concepts, all the basic concepts. All right, so all the basic concepts, not really okay, not really basic sharp. You guys, I would say you guys are a little above intermediate traders right now. You just need to know how to look at the chart and how to put all these things together. All right, so um, that's basically what we're going to be doing now. We'll go into the chart and try to take a look at it, analyze it, and see what understanding we can get from it. But before we go and do that, does anybody have questions so far from when you joined the class till now? So don't ask me a question from what I've spoken about when you're not in the class. Ask me a question from when you joined the class, something that is baffling you. So yeah.
CGI,
Yeah.
so from what you've said so far, the major liquidity is what forms the trend basically, right? If a major liquidity is taken out, it shows that the trend is continuing in that particular direction, either up or down.
Yes. If we're in a
Is that what it
downtrend,
is?
if we're in a downtrend and one of the
Yeah.
major liquidity on that downtrend is taken out, that means we're now in an uptrend.
Okay. Okay. Okay.
Anybody else? Okay, nobody. Um, so let's just have Look at the charts. So we have Euro USD. I don't trade Euro USD. I trade GBP, um, CHF, JPY, and Euro AUD. So we'll avoid those pairs so that when I'm analyzing this night, I can have fresh insight. What we'll do is that we'll look at Euro, we'll look at USD, JPY, and then we'll look at somebody give us what you want us to look at. Okay, you guys can trade. Okay, so I'll just look at BTC will basically move similar to Euro USD. To move similar to Euro USD. So um, let me see gold. Still kind of similar. Okay. Okay, let me just look at Forex pairs. Mm, that's card. Card
Okay, why don't you look at Euro Swiss franc?
Euro Swiss franc. Okay. Euro Swiss franc as well. All right, let's start. So we'll start with Euro USD. Okay, start with Euro USD. Let me delete everything on the chart. Start from the monthly time frame, which is basically the biggest time frame you have on most platforms. You can do a custom chart on most platforms as well, sha, but let's just look at the monthly. So wow, I had no idea that Euro USD is bullish on the monthly chart. So basically, Euro USD is bullish on the monthly charts. Right now, we are retracing. Okay, we are retracing. So we want to see where this thing reacted from. So we'll look over here. Um, we have a low here. So this low is supposed to be a sponsor candle or something like this down here. Okay, so there's something like that over there. And then this area um, could be a reclaim block right here. Okay, so um, price did not use any of them, so that is not what caused the next move. So what caused the next move? Look inside here. Okay, this guy took out liquidity here. This guy is a strong move, sha. So if he took out these guys, that means that it is bearish for a long time. So I want to know if he took out that guy, because that guy is a strong move. All right, so it respected that guy, and that guy is what caused the uh, upward reaction. So basically, Sha, all these places down here, they look like an imbalance to me. Alright, so it's still quite imbalanced. You can see how this imbalance is here was closed out. So all these downward places, I'm still this from looking at this now, I'm expecting euro to might even go below here, but it might also reverse. Basically, that's a very long time away, Sha. That's a very long time away. So we'll just basically look at what we have recently. Right, so looking at this area right now, we have a very strong push up. So whatever started this violent move, it is a sponsored candle, right? It's a sponsored candle. So I would mark it out, mark it out. So it's a sponsored candle to be properly seen on a lower time frame, right? And also we have this guy induced this guy over. It also has another high over. So this place is a strong, quite a strong low. If it gets taken out, I will expect price to push his way all the way down to here. All right, push his way all the way down to here. But then, um, there's an imbalance over here, sha. Imbalance is here. So before we get to this strong low, that imbalance might see a price reaction. You might see a price reaction at this imbalance. Might see a price reaction at this imbalance. Okay, so if we have a reaction here or somewhere here, price might continue going up from there. So um, that's basically it. So we'll now pull out our zones to the future. All right, so these zones are areas that USD might move up from. So it's pushed into that place. So the next one is this guy and um, this imbalance. So if I did that, so Euro has basically almost violated that as well. So go down to the weekly chart, nothing more. On this monthly time frame, we have a bullish Euro USD. So we'll go down to the weekly time frame. So that is 7 times less than the monthly time frame. So basically, I want to zoom in here because this place is basically where we are at right now. Okay, basically where we are right now. We still have a little bit of an imbalance. We still have an imbalance in here. Okay, so before we get this, you can see this guy that induced this place has another low here. So this guy is a major liquidity. Okay, and that major liquidity. I'm expecting it to go below here as well, sha. But for our first target, this low over here. But let me just draw this this place to this place. So this place is an order block. Okay. Euro USD might react somewhere in the middle of this other block. So that's the main threshold. So it might react before then or at that point. I'm not expecting it to, sha, because um, the bearish move is really strong. We've already taken out major liquidity. Okay, we're taking out this major liquidity. So I expect it to correct to the very end, to the very first imbalance down here. So all these ones are just precaution because even if it hits one of these zones and retrace a little bit, that might affect your trade on maybe a 1 hour time frame or your 4 hour time frame to be a very huge impact. A small impact on the weekly time frame is a very big impact on a lower time frame. Okay, so if I have a small impact on the weekly time frame, it'll be like 200 pips, right? And it will look small on the weekly time frame, but on a 1 hour chart is a huge price move, right? So that's why we still have to mark all this so that you know where to be a little bit wary, right? A little bit careful. Okay. Not that you're not trade at all, but you just probably how do I put this? Probably reduce your target. So don't be expecting price to go below this low at once. Okay. So I'm just going to refine why I'm coming back here so that I can refine this area. Okay. So I'm looking for whatever is inside the main order block. I'm going to reduce it. Okay, so you can see another smaller order block inside here, and there's still a small imbalance in this candle as well. All right, so I'm going to move it down to the end of that imbalance. Okay, so yeah, I won't refine it more than this. I'll leave it like this. Okay, I think this is enough. This is almost at the main threshold of the original candle, so I'm going to leave it like this. All right, so go back to the so basically, monthly, weekly, we have a bullish move that is now. turning bearish. But on the daily chart, strong bearish, strong. This is the daily chart you are on right now. Strong bearish movement, strong bearish movement. Okay, strong bearish movement. Right. So yeah, that's basically it. We move down to lower time frame. Let me come here first. This is what is our main business right now. Okay, our main business is down here. So the last place that price reacted, price came into filling an imbalance here. Okay, so this was an imbalance. Okay, this was an imbalance, and price filled it in. Right, and once price filled it in, it resumed the downtrend. So we'll assume that this is a point of major liquidity. Okay, major liquidity right there. Major liquidity. All right, so if that major liquidity gets taken, you might see price run up all this way to this imbalance up here, but that's a big shot. This small thing we're looking at right here is a very big thing on lower time frame. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Basically, like almost 3 weeks of action in this area. So this looking at all this area is just going too far, right? So basically, we are now here, right? So we have a downward move. Then this came in to mitigate something. So we look for a mitigation block. Look for a mitigation block, or you can call it a breaker block if you want to say it went above this high. So we had a mitigation block here, right? Had a mitigation block right there. Let me pull it to the bottom. Let me use the whole candle. So price mitigated it as well. So let me even put it here. So you can see the two up candles that went into it, and we continued pushing downward. So we'll zoom in some more. Okay, we'll zoom in some more. Price has currently taken out external liquidity, which shows us that the downward trend is still very powerful. Okay, still very powerful, and we still want to go down some more. So basically, what we're looking for here is uh, some push up. Want price to go up a little bit so that we can sell. So that's basically the idea here now. The idea is that price should go up a little bit and we should sell. Okay, so this is daily time frame. Mm, we now have these two candles right here. These two candles, right? So you can either take the two candles as the order block. I would use that instead. So using the candle blending principles or technique, we'll take it from the high of this candle to the um, opening of this candle here. All right, so I'll ignore this week. I put at the opening here. All right, so this might be where price will reach, or if we go on the lower time frame, that might not be the case. So yeah, that is where we expect price won't go beyond here if this downtrend still is still strong. Okay, so you can see how I'm just going downward, just kind of looking in. Right, so right now I'm not really looking at entry. What I'm just looking at is the direction and where price will be drawn towards in the next few days or few weeks. All right. So basically, what we're looking for is where are we going? Okay, where are we going, and um, where should we try to enter? So that's basically what we're looking at. So looking at this now, taking out liquidity here. So we'll go down to a 1 hour chart. Let me just go down to 1 hour chart. I've spent quite some considerable amount of time here. Okay, so looking at the 1 hour chart. Okay, looking at the 1 hour chart, you can see where on the daily chart, this was a daily chart mitigation block, this area. Okay, so don't forget this is the mitigation block on the daily chart, and now this is the area, those two bearish order block on a daily chart. Okay, so this is the area that we expect price to come into before continuing the downtrend. So what do we have again? What we have is that you can see, so basically we're using, you can see how we're using what we've learned to just kind of break this down, right? We're using what we've learned to break this down. So this place we had an imbalance, here, and price basically came in to fill in that imbalance, even went above it to take out this liquidity. All right, so after taking out this liquidity, it went down, but it did not make a lower low. All right, it did not continue the downtrend, did not make a lower low. So I would count this high since it's closing another block. Sorry, an imbalance. I'll count him as an intermediate high. So once the intermediate high is taken out, I expect that the downward move has paused. Okay, for some time. Has paused for some time. So this is basically giving us a little bit of hope that it might run up into this previous place. It might run up into this previous place. Okay, so uh um I would try and look in there now. So go to the right of the price action. So the first place that price might react, okay, first place that price might react, or basically we are looking for, if we go back to our teaching on what was that, on hold up, types of order blow. Let me see the thing. Okay, it's not the 10. Let me see the 7. So sponsored candle, right? So we're looking for a sponsored candle. So it induces liquidity or mitigates another other block that induces liquidity. There should be a violent move after it. It leads to a break in market structure. So since we're in a downtrend, we're looking for um, a candle, a sponsored candle that takes out liquidity by taking out external liquidity in this case. So it leads to the take out of external liquidity. All right. Okay, so it is on the side of the trend exactly. So we are looking for number one, a candle that takes out some sort of liquidity, all right, or mitigates a candle that takes out liquidity, has a violent move, and the violent move leads to a takeout of external liquidity. All right. So now, since we are having a progressive uptrend right now, all right, so we're looking for where we can sell next. So looking in here, looking in here. All right. So we have this place, right here. Price took out external liquidity. Okay. Price took out external liquidity, and before it took out external liquidity, we had a very violent move there. So who started this violent move? Who is the person? Who is that? Who is that sweet boy? All right. So that's who we are looking for now, and that will be our sponsored candle. All right. So we might. What I'll just do is that I will delete. I'll delete this. Should I delete this zone? Okay. Let me just create another zone, but paint it another color. So this is basically the area we're looking for. All right. So we're looking for somebody inside this area, and I will paint that place another color. Let me just go. That yellow is too. No, still not good enough. Give it. this color. Uh-uh. This option with high contrast. Let me just set it for this. So you can see somebody led to this taking out of external liquidity with a violent move. It also looks like we have liquidity induced. So we just want to go and look for that candle. And that candle will be where we look to sell. Alright, so price may never go to that candle, but we're going to treat it as a failure swing if price doesn't get here. So if price doesn't get here, we'll be looking for re-entry later on if we see conditions that are similar to a failure swing, which we have also spoken about before. All right, so to see what is inside here, I will go from a 1 hour chart to a 15-minute chart to see if I can see clearly. All right, or should I say more clearly? All right, so zoom in there. Okay, so I want to zoom in there, zoom in there, zoom in here. Okay, okay, all right. So this is basically what we have. There was an inducement, yeah, uh, a BMS, let's say BMS, an inducement. So this place formed a higher high, all right, formed a higher high, and then there's this area of um, this is a major liquidity for this short uptrend. So this short uptrend had this tiny major liquidity down here, okay. So it had this tiny major liquidity. So we want to know who led to the takeout of this tiny major liquidity. Okay, so I will just kind of zoom into the leg of or to the beginning of that area, all right, and just kind of see when it was taken out. So this place didn't take it out, all right. So but it was taken out here. It was taken out here. So zoom out a bit, zoom out a bit. So it was taken out on this candle, on this candle. So it was not this guy that took it out. It was this other candle here, right? So I would reduce the size of my zone. So from here to here, okay. Or let me just be generous and put it here, okay. So basically, this is the area I want to sell from, okay, because this guy is the guy that led to this push down. But um, did it mitigate an area? Did it mitigate an area that induced liquidity? I wouldn't. It did not really mitigate this area. It didn't mitigate this area right here. Okay, so it didn't mitigate this area right here. But what it did is that it mitigated this this breaker block here. Mitigated that guy. All right. But then to be safe, because we have this imbalance here, this the price might easily go out go as well. Okay, go ahead to um, fill up this imbalance before we go down. So you don't want to just jam your stop loss here. You can do it though. You can do it after some time of experience. If you have more experience and you've seen it over and over again, I know that okay, if it's mitigate this place, then we can jam our stop loss to here. But it's not very advisable. Okay, so you're taking a trade from here now, all right? You would have your entry, you have your entry to be here, entry to be there, all right? So you put your SL above the major high, right? The major liquidity, the major guy that induced everything, right? That caused the whole inducement. So that stop loss is 30 pips. That's a 30 pip stop loss, all right? So then you would zoom out, um, zoom out. So I'm going to move that thing to the front. We select it and see. how fast I can move it. I'm going to move it to the front because that's where the price is going to react. Sorry. Oh, still very far. Let me see. Might take a while, sha. Let's just be sitting on our hands. Or what I'll just do is that I'll just draw out. I'll draw this thing out in time. Okay, so basically this is our area of interest. All right, so then we'll zoom in to check out the major high before all the breakdown took place. So the major high there, that's this guy. I'll draw it out to the front. All right, so let me zoom out and pull it to the end as well. End as well, and then I will take this guy, pull it where I want it to be. Okay, so yeah, this is basically it, man. This is basically it, guys. All right, so we have this is the place we expect. We don't expect price to actually go above here, sha, but it might. So that's why we give it extra space. So you won't just say that okay, I must get the exact place. Sometimes it might not. All right, so it might just go and fill in that imbalance we saw at the beginning. All right, so it might, even though this area has mitigated the previous breaker block inside there. So we don't expect price to take it, right? But it just might. So we have to give it some breathing space and just put our stop loss 30 pips away. Okay. So if we don't put 30 pips away, our stop loss might be something like 10 pips or less, or just a little more than 10 pips. Okay. So that's just it. That's just a breakdown of Euro USD. So this this is for this trade. Okay. This is our major liquidity. Our external liquidity is our target. So our external liquidity is down here, okay, way down here. So this is our external liquidity. So this is where we expect price to take out next. All right. So we're just going to draw it all the way down. So this is our trade. This is our trade in this case. Okay. So we'll just be waiting for this thing might take a while. It might even reach here by next week. I don't know. Or it might get here this week. I'm not sure. Right? Depending on how fast the movement happens. Or if I never even get here, still on that scenario. Right? But yes, sir, this is basically what I would do in this scenario. This is basically what I'll do in this scenario. I'm just looking at the RRR, or the risk reward ratio. The risk to reward ratio is still is being tough. 8.54. So it's not bad. Risk reward ratio is at least 2 or 3. Okay, and you are good. All right. So should we, or if we should pull our stop loss down to here, which is our interest area, we pull it down to here. Our RR will be like 14, but let's not push it. We'll just leave it there. Okay, so I'm looking at 30 pips for um 256 pips. So yeah, this is just the basic trade idea on Euro USD. So this uptrend is happening here. So we have had a reaction from a sponsor candle. So sponsor candle takes out liquidity. You can see the liquidity that it took out. It took out this internal liquidity here. So it took out that liquidity, and we had a violent reaction that breaks market structure. Breaks market structure. So the price came down to that sponsor candle, okay, and it's reacted from it the next time. Okay, from it the next time. So now we have price making on that move. mitigating something here, and we have another violent move here. So probably the next place that the price is going to come down to is here. Okay, so here I'm not really looking deep into this because this is a correction. Okay, and since the move is still bearish, I won't really have much faith in buying this because it's a very strong bearish move. But because this retracement might last a long time, I I will buy this, but I'll buy it with probably lower lot size that I normally buy something that is probably, if I'm spending $5 on this trade, I might spend $2 or $2.5 on a buy. All right, because it's not as high probability as a sell. All right, a sell, I can enter a sell and even not even put a stop loss. Okay, and I may still have a very high probability that a very high chance that I will be in profit if I just wait it out. Okay, so that's why it's safer to sell here. So if I'm buying here, this is where I'll buy. All right, I'll buy if the price should come down now. The price should come down. My setup would be um from here. Okay, so I'll put my stop loss here. This one I'll jam it up because it looks like we've mitigated whatever was there. Okay, so there's no imbalance to come and fill below there. So I'll put my stop loss there properly. My target will be external liquidity. So this is basically how we trade. Find your major liquidity, trade close to your major liquidity, enter close to your major liquidity, then target your external liquidity and put uh major your stop loss to be protected by your major liquidity. So this is one trade setup we can use, and this is the second one. I would most likely encourage somebody to be in this one than this one. But this one is also juicy, sha. It's very juicy. The RR is even more than this one because this one we have an imbalance there, sha. But all good. This is basically the trade idea. This is already 9:10. Let's just do one more. I don't know. I think we should do one more, right? Or we should close here. But do we understand this analysis first of all? We should do one more. Do you understand this analysis here so far? Okay, let's just go to next guy. Let me use the other one that the guy said we should check. Even though it will be similar, if it's similar to Euro USD, then we'll not do it. But if it's quite different, we'll check it out. So Euro to the Swiss franc. Okay, it's quite similar for what I'm looking at, but not too much. I think Swiss franc is totally different. It's quite different from USD because Swiss franc is stronger than USD. Looking at the track record. Okay, quite different. Thank you. So we'll look at this one. So bearish, be monthly chart. Bearish. No, no much talk here. No much talk. So we'll zoom into the end of it, and we have an imbalance here. So imbalance got filled in. Imbalance got filled in. Okay, imbalance got filled in right there. Right. So price filling the imbalance. Let me zoom in to see what exactly right there. Um, So we have this point I can be here. So we took out a low and took out external liquidity. So I'm going to adjust this zone to the top to the bottom of that candle, and the top to the bottom of it. So yeah, that's basically it. You can see how price just tipped into it and got there violently to the downside. So this if price should go above here, the trend has changed to an uptrend. Okay, but no, it's still going down. So we have this external liquidity here, and it has already been taken out. It has already been taken out now. So this is dangerous, right? This trade is dangerous. So trading this pair right now is dangerous. It's quite dangerous because we have basically uh taken out. the last liquidity that we can see. So this condition is called an all-time low. You can see that I've never gone lower than this. So if you are trading here, it's quite risky because you don't know where price may react. There's nothing by the left that you can use as a reference point. Or let me check one broker. There's one broker that I like. They have very, very old price charts. IDC, I think. Yeah. So look at these guys. Oh, the chart is different. Okay, so it might be that broker that has a problem. Let me see another broker. This one has gone below it as well. Another broker. This one also has a long wick. Okay. Uh, ah, why are the charts so different? Come on. All these brokers be wild again. So basically, I have no choice but to look at this chart. All of them are just basically different. So we have chill. I can't do that. So I've gone below this external liquidity. So since we're at all-time low, we're just going to assume that price is still bearish until we prove it to be bullish. So we're going to go on the lower time frame to check all our strong highs, and any strong high that is taken out, we know that we're in an uptrend for a particular period of time. All right, so to go down to 4 hours too far. Go down to the daily first. Daily. All right, so this is what's happening on the daily charts. What's happening on the daily charts? So we started from, this looks like a mitigation block, but I don't know. We have this place right here. Price has never really mitigated that area enough for me, right? So you might see price jumping up there, but I want to look for a strong area. A strong area. I want to look for a swing high, or a, how do I put it? What's the name? Intermediate high. So that is where I would take as a strong point of reference. Okay, so we have the move here. Um, this is a very strong movement of price. Alright, very strong price movement. We have that strong one up here. These two are basically, or were basically never mitigated or covered up. Basically, we'll trade this first guy. Okay, so if this first guy, if we should go above this first guy right now, then we might actually be in a move to come up to this zone. Alright, so I'll use that guy as my point of reference. Right, so we should fill up that imbalance and keep going. That's a break of market structure for me to come up in here, right? Or to just keep going higher. I don't know. Okay, but I think we would take the range structure. We take all this range structure. If we should go above this high now, all this range structure will go. The range structure is the structure formed after external liquidity is taken. So after this external liquidity was taken, we had all this range structure. So yes, basically that is it. And this place we have a strong move higher. I want to go down to 1 hour. Let's go to 1 hour. 1 hour. So we have an imbalance here. I have an imbalance here. So I'll put, let me go down to the 15-minute time frame to check uh if we see. Let me draw the zone first. We'll draw a zone here and look at the 15-minute time frame to reduce this zone. Okay, so the job of the 15-minute time frame is to reduce the zone, or to find the zone inside the major zone that we're looking at. So yes, that's basically it. So we have push higher, tiny breaker block, tiny breaker block right there, a small breaker block. Price came down, mitigated the breaker block, and we continue pushing down. So um basically this place where I pushed up, that would be a nice zone for me. That would be a nice zone for me. Alright, so um, right here, I want to pull that out, and price has gone above it. Okay, price has gone above it. Okay, so the last test of the last line of defense that I don't really think will work. Since I'm taking this this place that price should react from, it's supposed to take out this high, but we'll give it the benefit of the doubt by waiting. Okay, so this is the area that is the last point of contact. So I'll delete these two now. These two are failed, they fucked up. Okay, so I'll delete the two, they are now irrelevant to me. Okay, I might let me just go down to 5 minutes to look at what might be down there. Okay, look at what might be down here. Okay, it's basically three candles following each other, so that's still a 15 minute order block, so you cannot really reduce it. Still a 15 minute order block, right? So we'll leave it like that. We'll leave it like that. I still go to a lower time frame, but let's that will be going too far for where I'm coming from. So basically, this is where price should react. If price doesn't react here, that's reacted a little bit. But if price should go ahead and push above this area, then we'll be buying to this area up here. Okay, so for this pair right now, okay, what I'll be looking at, what will be my idea is that I cannot do anything right now. Okay, there's no break of market structure to the upside or downside. We've taken this external liquidity on the monthly chart. This one we've taken it, so we're now at all-time lows over here. So price might want to retrace or it might want to continue. So if it's retracing, we want to see it go above here. So if it goes above here, we'll buy to this zone. Okay, if it goes above here, we'll be looking to get up here. I don't think this zone will react well after it goes up above this one. I don't think this zone will be a strong area at all. This guy is what I'm looking at. So if we go above here, I'll look at buying to this area. But if not, we want to know if the downtrend will continue. Okay, so we want to know if the downtrend will continue. So we'll zoom in here. We have an imbalance. Does it mitigate this area? It doesn't mitigate. So that means there's still a tiny imbalance down here as well. So there's still a tiny imbalance. I can call it a fair value gap down there. Okay, so um, if it comes down to here, that is a break of market structure on the 1 hour time frame. Okay, that will be a BMS. So if it goes below here, I'll look for a pullback to sell to. Right. So if it goes below this place, I'll look for a pullback to sell to. So this is basically my plan. This is what I'm hoping for. Um, Either it comes down here. Okay, so once it comes down here, that's a bearish sign. Okay, so that means this uptrend is over. Uptrend is over. So I'll look for a pullback. Then from this pullback, I'll sell and to continue lower. The other thing it might do is that it will go above the high. All right. So if it goes above the high, we'll come down to close either probably this fair value gap or just this one here and keep going higher to this point. So that's basically the plan for Euro CHF. Nothing you can do here, or personally, nothing I will do here, sha. So another trader might look at this thing and find another opportunity, but for me, I won't be doing anything here. I'll just be watching. All right, so I'll just be watching. Okay, so yeah, somebody might sell here saying it's sponsor time, but it looks strong to me. I will not sell. I will wait for it to either show me a sign of bearishness or a sign of bullishness. So that's that for this one. And let me quickly. Okay, somebody speaking. Yeah. Mm. This place. Yeah. Is it possible that it will induce this one and keep going higher? Yes, it's possible. It's possible for it to induce here and go higher. But if it goes below here, it's definitely bearish. As long as it's still that's not taking this strong low or this intermediate low down here, I don't see it as bearish yet. Okay, and as long as it doesn't go above this high, sorry, this high, I don't see it as bullish yet. So basically, I'm sitting on my hands because this is a precarious situation. Normally, I will sell it directly from here. I will sell it, but because we are at all-time lows, I don't want a surprise that price will just I will sell here and then price will just boom. Okay, so assuming we're not at an all-time low, because we're at all-time low on the monthly time frame, we don't have a solid target on the monthly chart that okay, we are going down to this liquidity before any major move. Okay, on the monthly chart, any major move now can totally fuck up your trade here. That's why I'm being careful. Normally, what you're supposed to do is just to sell here. Okay, because um we have internal BMS inside here, probably. I don't know. I have to look on the lower time frame, but we might have internal BMS here, and but that BMS is only a sign that we are going to cover this imbalance, not necessarily anything special. Okay, so it can come down. It can definitely come down here and continue going higher. Yes, it's possible. So, but until it goes above this zone, I won't buy it. And once it goes below this line, I won't sell it. So, it's just how to be careful as a trader and to avoid traps. Okay, that's just it. This one, this upper one, this one, this one here. That I think this is a mitigation block on a daily chart. On a daily chart, that was a mitigation block. You can see it, mitigation block on a daily chart. So, and we have an imbalance there that has not been mitigated at all. So this range structure just it did not really mitigate that zone up there. So this is a mitigation block on a daily chart. All right. So this is just boom imbalance and no touching, no mitigation. So I'm expecting if we're retracing, we should at least retrace to that imbalance before continuing the downtrend. So if we continue the downtrend from here, we would see this place down here as our liquidity, external liquidity. So yeah, that's what the higher zone is. The higher zone is a mitigation block on daily charts. Mitigation block on daily charts. Yeah. Oh, I think I don't know. There's no trade idea here. Let me quickly look at this. I'm just going to break it down sharp sharp. Uh, since we said three, so that we can have something to look forward to by tomorrow's class, or sorry for the rest of the week to see how the price is moving. Okay, so the price may totally shock us and do something else, or it might not. So basically, we have strong downtrend on monthly charts, very strong downtrend. So we have a BMS to the downside, BMS to the downside. So we have this low and this high came to, looks like it came to close an imbalance, right? So if it gets taken out, then the price is bullish. So if it's bullish, that means it's coming to close this gap over here. It's coming to close this gap over here, right? So that high is an intermediate high. Intermediate high. Okay, so yeah, that high is intermediate high, and we've not got into it. So we're going to look at it might never take out that liquidity. Might never take out that liquidity. But we're going to check on a weekly time frame if we have anything significant in here that is a sponsored candle, because this is a downward move, this is a bearish move. So all this thing doesn't mean anything. It can just come to a sponsor candle and sell off from there. So you don't want to be caught in that. So look at a weekly time frame and try and find the sponsor candle. Alright, so the sponsor candle, once it hits the sponsor candle, it's going to have a retracement. Okay, so looking at it now, I'll refine the zone to yeah, right there. We have a tiny internal liquidity here, so I expect it. So this is on a lower time frame, maybe a daily time frame now. You can see this candles high. It is a tiny liquidity. All this and imbalance up here. So I expect price to still go above that liquidity. Yeah. So that is the area we are looking at. So that's the area we're looking at. So basically, USD is a safe buy. It's still a safe buy till we get to this zone. Once you get to this zone, then it's a dangerous buy. Then it's a dangerous buy. Then it's a dangerous buy. So we are almost there. But let's look if we have any special thing over there, like a mitigation block. So breaker block is right there. We have this tiny imbalance here, tiny imbalance that coincides with this breaker block. So I will just put something there. If we feel in that imbalance as well, that might cause price to shift. That might cause price to shift. Okay, so that might cause price to shift. So basically, this line is my first target for buying, and this zone. Okay, so the line is my first target for buying. This line right here, the end of the imbalance, is my first target. All right, so from where we are now to that line is about 150 pips. So it's still a good trade. You can still find a good trade there. And to the zone, it is almost 400 pips. So still a very good thing, daily range. All right, so you can go down to the daily charts and see what we got. So on the daily charts, very strong, very strong. Right, so mm, we will not be expecting a retracement yet, right? So it looks strong. We don't expect it to retrace down to here before taking out liquidity. This liquidity is so close. Okay, so we have this external liquidity here that is so, it looks so close and so juicy for price to get to. So price will probably reach it before any retracement. So first to reach here, then yeah. Okay, so we'll go down to 1 hour chart to look at what we might trade from there. Go down to 1 hour chart to look for what we might trade from there. Okay, so we have this place, goes below some things. uh I won't really uh look at all these things too much. We have a small vacuum here, so that vacuum might be something to be careful of. So price might come down into this vacuum block. Yeah, price might come in to close that, except if it's this broker that just created that thing for their selfish interest. But if that vacuum exists on every other marketplace, then this vacuum is going to be somewhere to probably watch out for. So we want to take note of that vacuum as well. So price would want to come down to fill it. Okay, so 1 hour chart. We might never come down here. Okay, so the first area is sponsor candle. First area to buy from is sponsor candle. But basically, the market has is probably very dull right now. Okay, very dull right now. So want to look at a good area to buy from. So this is a strong imbalance here. A strong imbalance here. There's an order block down here, right? A other block down here as well. So want to see all the areas that we can have a good reaction on a 15 minutes time frame. 15 minutes time frame, right? So mm, imbalance here. Okay, so this time meeting here might react because there's a violent move after it. A violent move after it. And there's not much down here actually because this is just mitigation. This place wasn't properly mitigated, sha. This candle has not been mitigated. No other candle has really come into the zone to do anything much. Alright, so there's a tiny candle at that week. That week is a tiny rejection block that has not been used at all. Okay, so yeah, this tiny candle, let me make it on that color. Even though I don't want to mark it out because it is just above a tiny vacuum, but it's still very important, sha. Still important. So, um, but then the move is very strong, sha. The move is very strong. I don't really expect it to come down here. All these areas, all these areas are just for uh, if it takes out liquidity of the Asian range might just be a consolidation or a retracement down to any of these areas. So, by morning, the thing it might do by morning, most likely thing to do is just to use this other block here, okay, or a sponsor candle. All right, it will likely come down here, fill in this imbalance, and go higher, or it will go below it. If it goes below it, then we're coming to one of these areas. So if it comes here and makes a higher high, we'll look to buy whenever it comes to the proportion block that is formed at this zone. Okay, so when we come here, we don't expect this other block to still be the reactor. The reaction will be the proportion block that is formed after it hits this zone. So now the two scenarios for USD JPY. The most likely scenario is that we'll hit here, okay, which is the one I'm expecting, that will just hit here and go higher to those our targets. Okay, so hit there and go higher to the targets. I don't think it will stop here to move to this place, most likely to move to this place. Okay, so because there's an imbalance there to likely close it. So this is basically my trade idea. Okay, so my trade idea here is to buy here if it's react here, to buy here if it's react here. So that will basically be like this. So basically be like this. Stop loss there, stop loss there, and take profit at the end of the daily imbalance. But my first take profit will be at this external liquidity. So let me show you guys external liquidity for reference. Okay, so the first external liquidity here is the first place that you take profit. The final target is here. Okay, so that's basically the idea for USD JPY. So uh this one sha, I will be looking for some confirmation before I enter this trade because might as well come here to close all this imbalance. The reason why I expect it to close this imbalance is because it has not mitigated this previous range. Okay, so if it comes down to all these areas, then it will mitigate this range. So I'm skeptical about buying up here. Okay, but it might not come down here as well because this liquidity is so close. So that's why I'll be looking for a tiny uh move up first. So move up above this high at least. All right, then retrace, then I buy it. All right, that's going to be my jam. All right, or so this is my first thing I'll do when I expect to happen, or it might just come down to one of these places. Then I'll buy from there. I think from here I'll just buy. If we have a small retracement, I'll just buy it directly. So yeah, let's look at 4 hour so that can get a look back. This trend has lasted a long time. But basically, this zone is a strong sponsor candle on daily chart. Okay, this first blue line is the end of an imbalance on the daily chart. Okay, so we expect it to go above here, but it might reverse from there. While this tiny one is just external liquidity for this range. All right, so those are the three targets. Okay, while in here we're looking for some clarity. Right, so going into the Asian session. So we're going into the Asian session now. I expect the Asian session to just retrace down to this place to close in the imbalance. It might even come down here, sef, but I doubt it. The reason why it will most likely not come down here is because the liquidity is so close. So it will likely just come down here, take out the liquidity before coming down here. So yeah, I was this is where I would like to buy from the most. Okay, the most juicy place for me is this areas down here. I won't like to buy here. It looks sketchy to me. It looks like a trap. So I would like to buy when we close the imbalance before I buy. Right. So yeah, that is basically what I'm thinking for USD JPY. Right. Okay. So the most clean trade for me right here is this Euro USD, the first one. But yeah, that's the three places. Do you guys get the breakdown so far? Okay. So for the rest of this week, I will just be doing things like this and kind of following through. So, um, if you see one of these scenarios playing out, you can test it with your demo account, okay? But the one I have most confidence in is this Euro USD right here. So if Euro USD should come down here, I will buy it, but with 0.01, okay? This one, same lot size, okay? So 0.01, just sell it there and you take your profit down here. So this is my trade. Probably this one will form this week. Okay, but this one it might take a while, but it might not. I'm not too sure. But this one is definitely I'm definitely looking forward to this one if it plays out. So yeah guys, that's just basically the breakdown on how you navigate the chart. You just look at the trend from up to down and what you want to do is to trade in direction of the trend by looking for a currency pair that is currently retracing. So if it's retracing, like Euro USD in this case, you look for your selling area and wait. So once it gets there, you enter your trade and wait again to see what happens. Either hit your stop loss or it hits your take profit. The good thing is that most times your stop loss is smaller than your TP, so you won't have to waste much time on a loss. Alright, so a loss will come very quickly, but you have to be patient with your profit and you have to actually use your brains. Okay, so we've done the most important parts when it comes to trading and market structure. Top down analysis is basically what we did today, but we'll still talk about it some more tomorrow. And for the rest of the class, we'll just look at all this the rest of the time slightly advanced concepts. Then after those, we don't really have much again. We just the part beyond technical analysis and just um analyzing. So we basically learned most of the important stuff. All these things you don't really need them. What I've taught you so far, all you need to be to understand the chart and trade. Okay, so you can just be testing out your skills on your demo account. Okay, so you might take our trades in this class on your live account, but all these other ones, all these anyone that you do on your own, just be testing your ability. Don't just say, okay, uh I've learned this thing and you not use it. Just go on your chat and be analyzing. Don't come to me and ask. Okay, you can come to me and ask questions, sha, but just try to take your own trade and see how it goes. It's demo account, so you won't. There's no loss on you. So just take it on your demo account, analyze the charts, have fun with it, and basically you get better slowly. Okay, so yeah, that's basically it for tonight. It has been a really long class. This is 2 hours complete now. Um, have a good night's rest and see you tomorrow. Yeah, good night.